Greetings, Dividend and Conquer fam. Today, we delve into the enigmatic world of QQQY's option strategy. We aim to dissect its efficacy, but more than that, we're all about empowering you to make well-informed financial decisions. So let's jump in! Imagine a timeline that stretches back to September 2018. The NASDAQ 100 index reveals price variations that play a significant role in our study today. Now, these aren't just arbitrary figures. These numbers define the foundation for our analysis. Ensuring accurate option premiums and strike prices is vital for determining the viability of any strategy. You might ask, why is this so important? Well, the NASDAQ 100 options are settled daily, anchored on the strike price difference from the final index settlement price, multiplied by 100. Simple, right? Now, where this becomes a bit intricate is the strategy applied. QQQY's approach is fluid, adapting to market conditions. Some days they employ an aggressive strategy, while other days it's more conservative. Alright, let's deep dive into the specifics. The price you see on the screen, believe it or not, is pegged at just $1. This is proportionate to the cash balance. So, while the strategy we dissect might differ from an individual investor's approach, it gives us a window into the potential success rate of QQQY's strategy. Moving forward, let's consider an interesting tidbit. Daily, the settlement value revolves around the previous day's closing price. The intricacies lie in the dynamic nature of the strike prices based on the changing strategies. This is why understanding the QQQY ETF's multiple strategies is essential. Now, a little pause here. If you're finding this content valuable, don't forget to hit that subscribe button and join the Dividend and Conquer community. We're all about sharing knowledge and growing together. Alright, back on track. So, our focal point is the option premium. While I wish I could say it's an exact science, it's more of an educated estimate. Market volatility plays a pivotal role. Imagine a seesaw. As volatility soars, the opportunity to employ a conservative strategy rises, curbing potential losses. However, a single volatility level might not capture the full spectrum of possible outcomes. So let's pose the million-dollar question. Does this strategy hold water? Moreover, which approach yields the best results? Many of us can resonate with the initial hurdles of investing. Back in the day, even saving a few bucks seemed daunting. But fast forward to today, and we're in a sea of options, strategies, and tools that simplify the process. For today's analysis, let's consider the at-the-money option strategy. It promises an annual distribution rate of 5.5%. Now, keeping the math aside, let's ponder on the key metrics. If days when profits are earned surpass the days of losses, is the strategy worthwhile? Drawing our journey to a close, let's remember one pivotal point: the dynamics of the market. High volatility days, like the ones experienced during significant global events, can alter the game. But with a nuanced strategy and an understanding of the QQQY's approach, one might navigate these turbulent waters. Delving deeper, let's explore the journey of Sarah, a tale of financial enlightenment. Let's take a moment to reflect on a real-world example that illustrates the value of understanding and navigating the complexities of the financial realm. Meet Sarah, a young professional who began her investment journey with a mix of enthusiasm and trepidation. When Sarah received her first substantial paycheck, the thrill of having her own money was palpable. Like many of us, she dreamt of the things she could buy and the places she could visit. But there was a small voice at the back of her head that spoke of the future, of the unforeseen challenges life might throw her way, and of the dreams she aspired to achieve, like owning a house and achieving financial freedom. After seeking advice from her peers and doing her own research, she took the plunge and decided to invest a portion of her savings. At first, she was tempted to put all her money into a single, promising stock she had heard about at a dinner party. The potential returns were enticing, and she thought she might have found a shortcut to wealth. However, her mentor, an experienced investor, shared a crucial piece of wisdom. Sarah, it's not about one big win. It's about multiple small, consistent victories. Don't chase the quick buck. Look for the steady and reliable growth. Taking this to heart, Sarah diversified her portfolio. She invested in various sectors, from technology and healthcare to renewable energy and real estate. Over time, she also looked beyond her home country, putting her money into emerging markets that showed potential. The results? While the promising stock she initially had her eyes on did soar for a few months, it crashed spectacularly after a scandal hit the company. If she had put all her eggs in that one basket, Sarah would have faced a substantial loss. But thanks to her diversified portfolio, the impact of this one stock's downfall was cushioned by the gains in her other investments. Sarah's journey wasn't always smooth. There were times she doubted her decisions, especially when the markets went through turbulent phases. But with every dip, she reminded herself of her long-term goals and the wisdom of not reacting impulsively to short-term market fluctuations. She also became a lifelong learner. Sarah subscribed to financial news outlets, attended seminars, and even took a few online courses on investment strategies. With each passing year, she became more confident in reading market signals, understanding global events, and adapting her strategies accordingly. One of the most significant lessons Sarah learned was patience. She realized that wealth creation wasn't a sprint, but a marathon. While it's natural to seek immediate gratification, the real rewards often lie in the future, waiting for those who are persistent and informed. Now, as we delve deeper into the intricacies of the financial world, remember Sarah's journey. It stands as a testament to the importance of knowledge, diversification, patience, and continuous learning. In today's financial landscape, understanding the nuances of investments is more crucial than ever before. While many people think of the stock market as a high-stakes poker game, with winners and losers chosen at random, in reality, success often comes down to informed decision-making, dedication, and a well-rounded perspective. Understanding market cycles. The stock market isn't static. It moves in cycles often influenced by broader economic factors. By recognizing these cycles and understanding their implications, investors can make more informed decisions about when to buy or sell. Historically, those who've tried to time the market or predict its short-term movements have had limited success. However, understanding long-term trends and the underlying factors driving them can help you position your portfolio more effectively for the future. The impact of global events. In an interconnected world, global events can have a significant impact on your investments. Whether it's geopolitical tension, natural disasters, or global pandemics, these events can cause market volatility. However, they can also present opportunities. For instance, industries that suffer short-term setbacks due to unforeseen events may rebound strongly once the situation stabilizes, providing savvy investors with a chance to buy in at a discounted rate. Continuous learning and adaptation. Perhaps the most crucial takeaway is that the financial world isn't set in stone. New technologies, emerging markets, and evolving consumer trends can all influence the market's direction. As an investor, it's vital to stay informed and be willing to adapt your strategies as needed. Rely on trusted financial news sources, engage with a financial advisor, and always be open to learning more. The more knowledge you have, the better equipped you'll be to make decisions that align with your financial goals. The importance of patience. Lastly, it's essential to recognize the value of patience in investing. The stock market will have its ups and downs, and reacting impulsively to short-term movements can be detrimental to your long-term success. Instead of getting swayed by the daily ebb and flow of the market, focus on your long-term objectives and trust in the strategies you've set. As we conclude, let's ponder on this. Are you keeping pace with the dynamic financial landscape? How are changing strategies and fluctuating markets impacting your investments? Do you feel equipped to navigate these challenges? Drop a comment below sharing your thoughts and any topics you're itching for us to explore. Together, let's dividend and conquer. What's your next big financial question? Let us know. Your input might just inspire our next video. Thank you for joining us today. If you found this video insightful, please like, share, and most importantly, subscribe for more content. Let's continue our financial journey together. Stay empowered, stay informed, and remember to dividend and conquer.